All right, we're back for another episode of the REMO Show, and today we're going to touch on a topic that comes up all the time, and it's essentially just understanding pre-approvals and why you need one. We've touched on this topic before. It's certainly a timely one, and as the market picks up with rates coming down, we thought it would be a good time to just provide a clear education around a pre-approval and what we like to call a true pre-approval and what that means. There certainly is a lack of knowledge in the space, in the industry, when it comes to pre-approvals, and that's why we thought it would be good to just touch on this one again. So what is a pre-approval? I'll start there. We can start just ultimately by defining like what a pre-approval is, and a lot of banks will look at a pre-approval as more so just a rate hold than anything, and a lot of banks, when they say you're pre-approved, again, it's just really they're just holding a rate for, let's say, a certain period of time, like 90 to 120 days. And a lot of times they actually don't look at any of the documentation, at least in detail. In many cases, they might not even pull your credit. So from the understanding of thinking that you're pre-approved and you're qualified to go buy a home, and a lot of times, the numbers that they tell you in those types of situations are really just hypothetical based on what you told them. So there's really no verification involved in any of that. And that's where we come into the process, where as a mortgage broker issuing what we call a true pre-approval. And what we think about a true pre-approval is somebody, or let's say a sophisticated, experienced person in the industry actually going through the details of your income. So looking at all your income documentations, all your documentation when it comes to down payment, making sure that everything is accurate and giving you numbers based on the accuracy of those documents. So that would obviously include a credit check. So back to what I mentioned, a lot of banks might not even pull your credit. We're certainly going to include a credit check, any debt analysis. And again, back to that down payment verification, that could be a big one too. And making sure that, depending on where the money's coming from, that it's actually going to be available given, the timelines that could be attributed to that, such as RESPs, TFSAs, any sort of accounts that might take some time to redeem. All of these things are going to be looked at thoroughly, and we're not going to issue any sort of pre-qualification numbers without a full review of those items. And so that is, I think, the biggest difference of what a pre-approval is or is told to be in the industry from a banking perspective versus a true pre-approval from a mortgage broker.
Yeah, and I think part of why there's such a misconception on what a pre-approval is, you could Google it. A lot of banks market like a 90-second pre-approval, right? And you're clicking on a form, putting in your income, putting in your debts, and they're spitting out some sort of a document with a rate. Again, to Dean's point, not a pre-approval. There's a very, very strong chance that that's not accurate, and you're going to go spend weeks, months with your realtor looking at properties only to find out that your financing doesn't work, which in our opinion is the worst case scenario from a pre-approval perspective. So just a little bit on the pre-approval, like even a true pre-approval, when a broker does a very detailed job working with you and your application, your documentation, going back and forth, confirming all the information is correct, a pre-approval is still not an approval from a bank, right? So a pre-approval is done internally. Like we do our pre-approvals internally because we're putting the emphasis on ourselves to find potential flaws, to confirm the information is correct. You're not going to secure an actual approval from an institution until you've found a property, written an offer, or if it's a refinance, until we're submitting for an actual approval. Now, the rationale behind that is banks, credit unions, mortgage finance companies, they just literally cannot put the time and energy into working through all of that information to issue an approval, not knowing if it's going to turn into a transaction, right? So respecting where the banks are coming from, they are relying on mortgage brokers to do a proper pre-approval for the client. They are relying on the broker to have all the information to make the approval as efficient and quick and simple as possible when you do get an accepted offer. So even when you are pre-approved, you have to consider if your job changes, if your hours change, if your credit changes, if your down payment adjusts, right? If any negative impact to your application since you were issued a pre-approval, that will 100% have an impact on your approval when the time comes. So just wanted to really emphasize that point. A pre-approval is not an approval from an institution. You're not in the clear to go subject free. There's a rate hold involved, which is typically 120 days, sometimes 90 if you're working with a credit union in some situations. But keep that in mind. The other big part of this, like I mentioned, is until there's an actual property involved, a lender won't issue an approval, right? They want to know that, let's say, Tyler, as an example, is buying a property. Tyler's a AAA client, perfect credit, no debt, great income, fully qualified for what he wants to buy. But then when he finally finds a property, maybe it's a remediated grow op, or maybe it's a property that's in terrible condition, but he's handy and he's going to fix it up. Those are both situations where if you submit that file to a lender, many lenders are not going to be able to finance those properties. Obviously, there's an asterisk to that. In certain situations, there's exceptions, but the actual approval is going to be very reliant on the property, the condition, the zoning and conforming aspects, as well as the appraisal, right? The appraisal is going to confirm the current market value of the property. So just keep that in mind if you're working through that process. There's still an approval process to run through once you've actually found a property to purchase.
Yeah, great points. And I think that really all underscores why it's important to really work with a true blue mortgage professional, and definitely do not rely on any instant pre-qualification tool. Those may be, a helpful guide in some situations, but what a true pre-approval will actually mean for you is like a rock solid roadmap as to what you can actually afford and what property types will fit your budget. And that's what a true pre-approval would be, right? So rather than going out and wasting all your time on the weekend and really going online and looking at properties and trying to rely on this like information that was spat out to you in 60 seconds or less, like you just don't know what you don't know. And that's why going through a full pre-approval process, and I say this every time talking to new clients when we're going through a pre-approval, the banks are asking for just about everything except for a blood sample these days, right? They really want to know and understand everything inside and out about the people that they're going to be lending hundreds of thousands of dollars to, millions of dollars to in some situations, right? So spend the time. It's just a little bit of effort on your end to get us some supporting documents. And then that way, if you do the work now, you know what's possible. To go out and you're looking at properties in the price range, which is the best use of your time, best use of your realtor's time, and your mortgage broker time.
With that, let's just talk about some of the common misunderstandings about pre-approval. Some of this might be a little repetitive that came up throughout our discussion already. One thing I just want to touch on is just the terminology between a pre-approval and a pre-qualification. That comes up quite a bit in conversation, where somebody gets a pre-qualification online. Let's say they went to a bank's website or a mortgage broker's application and been given some form of a confirmation that they're pre-qualified. This is very common in a lot of banks' websites that are pushing online traffic to capture people's interest and get as little information as possible to issue them some form of a certificate or some form of a confirmation that they feel like they're pre-qualified or pre-approved. And what that typically means is we've talked about like the limitations of maybe the documents that they're going to request that we touched on earlier, but this goes even further down that road of limited information, and it's just even asking less questions through these online forms and then spitting out some form of gratification that you have something to rely on, and in my opinion, it's more of a bait or misleading than anything, and then getting you to a point where now you have a live offer and you're scrambling to make that work based on now having to give more information, having to give more documentation, so on and so forth. So just I couldn't stress enough how much to just avoid one of these pre-qualification type situations or really anything that doesn't involve a very, very thorough check of all documents and all information, because it can really lead to a disaster if you leave it till last minute once you actually have a property accepted and you having to close on it. So I just really wanted to touch on that difference and key advice there.
Yeah, and I think one thing for a buyer or borrower to deeply understand is you might think you know what your income is, but I can pretty much guarantee you don't know what a bank is going to accept. So let's use the online calculator later as an example, or maybe someone just does an application, right? And they think they've given us all the information. They say they make $100,000 a year. There are so many situations where we have to collect if you're self-employed, right? Maybe you claimed $100,000 last year, but the year prior was 50. They're taking a 2-year average now at 75,000. Your qualifications out the window, right? Someone who's maybe employed at $40 an hour at 40 hours a week. But once we get the T4s and the pay stubs, a lot of times this happens in the construction industry. We're noticing that you're not actually getting 40 hours every single week, right? Banks are going to notice that. So it's our job as a mortgage broker to pick up on those things, dissect them, have conversations with lenders before we issue a pre-approval. So really understanding the numbers that are being used going to be very, very difficult for a buyer. Even a broker that's been in the business for a couple of years, there's still situations that you have to work through, and there's certain types of income that lenders won't accept, right? So there's a lot of moving parts. There's a lot to know. Every lender has different guidelines as to how they're going to use income, look at income. So that's something that you really have to rely on a broker to do their due diligence, dig in deep, and provide you with feedback. So just one consideration there. The other point, from a credit perspective, they might say, how much debt do you have? It doesn't really matter what your debt balances are. It's what type of products are they, right? A credit card payment is going to look a heck of a lot different in a mortgage application than it is to you in real life making an interest-only payment. A car loan, as an example, doesn't matter if it's a $100,000 balance. If the payment's $1,000, we're using $1,000, right? It could be a $5,000 car payment with a $5,000 car balance owing with $1,000 payment. Again, they're using the $1,000 payment in that application. So there's a lot that goes into it to spit out proper numbers. And then I'll just dig into some common mistakes that we see, right? And going back to my point earlier, if your situation changes, your pre-approval's out the window, right? If your income goes down, and don't get me wrong, a lot of times these changes are positive that could actually improve your qualification in your pre-approval. So you have to let us know, right? If your salary goes up, if your wage goes up, if you paid off debt, all those things are positives. On the flip side, if anything changes from a negative, that's going to impact your qualification negatively, which is the worst case scenario in these situations. Because again, you're spending weeks, months, evenings, weekends looking at properties only to find out that it's not going to work once you've finally found the home that you want to buy. So make sure you have full disclosure with your mortgage broker, not even on changes, also at the beginning. Like if there's something you think that might be a negative in your application, or maybe you have a car loan that doesn't show up on your credit bureau. These are all things that you have to talk to your mortgage broker about, because if we don't know, we kind of have blinders on, and this is something that absolutely could come up throughout the process, right? So full disclosure is very, very important. Keep in mind that your broker is working for you. They're working with you. They want you to get a house. They want to get a deal done. That's how mortgage brokers get paid. So keep that in mind. Full disclosure is very, very important.
One thing I just want to touch on is just some of the common mistakes or pitfalls that we've seen in the past is more so around people that are carrying other properties and keeping those properties while going into purchasing, say, another home. In that same scenario, maybe somebody has a mortgage on a rental home or a second home, and they're trying to pay that home down quickly. So maybe they've increased the payment. That whatever the payment is on that credit bureau is going to ultimately impact your qualification on the next property. So just keep that in mind, especially around variable type products where you maybe have a variable rate mortgage on another home. Maybe you decided to keep the payment higher than lower as the rates start to go down in this downward trend. Keep in mind that the lower the payment on all your portfolio, the easier it is to qualify. So you can always make lump sum payments on those other properties to catch up and be on track to where you want to be from a pay down perspective. But try to make sure your payments are as low as possible on anything you're carrying forward into another application.
Yeah, and not to sound like a broken record, but that just kind of highlights like why it's so important to get the full picture, because there's a lot of misconceptions out there, both positive and negative. I mean, we take these calls all the time, like, oh, I don't have 2 years at my job, so I didn't think I could apply. When we've gotten people approved that have been 1 week at their new position, depending on the structure of the employment. And there's also, if you're working with a solid professional, there's certain tricks of the trade that we can apply, all legitimately, of course, but different things we can help you in the upfront process, different tweaks you can make to your debt load and different balances that you carry, or pieces of your income that you didn't know that we could actually help to improve your qualification standard. I mean, one quick example I think of is student loan debt, right? A lot of times with student loan debt, you can play with the actual balances that you choose to pay. Sometimes reducing it to the minimum payment might get you that 1 bedroom in a den that you wanted instead of only qualifying for the 1 bedroom. So it's just coming to letting, like we get the calls all the time, like, I don't want to do a full app. I just want to run numbers, just want to run quick numbers. And it's like, we've kind of gotten to the point where we don't even do that anymore because it's not the best use of everybody's time, and it's just you're going to do yourself a disservice and maybe walk away from properties that you otherwise could have afforded had you actually gone and got a full pre-approval done.
Yeah, well said. And again, like just to stress what you just said is the planning process. The pre-approval process is just planning for the future and getting ahead of a lot of these things, whether it's issues or strategic planning and tips like Tyler mentioned. Just getting ahead of it and ultimately building a plan to address it. So let's look to wrap this up around the process of getting a pre-approval and what that looks like, and understanding the process. I think this is important for us to touch on because understanding the process is what's going to lead to understanding that you actually have a true pre-approval or not. Because for a lot of people, like we talked about throughout this episode, is going to a bank, getting the limited, request of documents and information. You may not know otherwise, and that's why you think you're pre-approved. And so that's a big reason why we want to just touch on the process. So what I'll do is I'll just quickly outline kind of the steps involved in obtaining a pre-approval. It starts first and foremost with a discovery call of really understanding what your current situation is and what you're trying to achieve. So what where your goals are and how we're going to get there. And we start by, after taking that information and starting to build our executive summary of what's going on and what's going to happen going forward, is the mortgage application. And this is a very thorough application that's asking for all sorts of data points that any bank is absolutely going to need. But again, they might not be asking for you up front. Not only is it what you do for work, your assets and liabilities, but what is your rental property portfolio? How many properties do you own? Do you own properties in other countries or don't you? Is there income from other countries over and above what you're receiving in this country? Where is your down payment coming from? Just there's a lot of things that we're going to go through, and the more and more in depth that questions or items that are included on the application, the more you're going down the right path in being full disclosure and ensuring that you're going to get the best advice and most accurate advice from the institution or the broker you're working with. Some of the documentation that would be required would be a job letter, pay stub, sometimes 2 pay stubs, T4 statements for the past 2 years, maybe 3 years, notice of assessments, as many as the last 2 years is 3 years. If you're self-employed, business financial statements for the business that you own, T1 generals for you personally, that as many as 2-3 years could be required. Bank statements as a self-employed individual or a commissioned individual for as many as 12 months. These are the types of things, and it sounds like an in-depth amount of documentation, and it certainly is. And I can tell you, not one mortgage broker wants to request or go through any of these items, but it is required. We ultimately know it's going to be required, and no mortgage is going to get funded without these items. So we just deal with it up front and make sure, again, we're putting you in the most efficient and most safe position to go forward.
Yeah, I mean, it definitely sounds a little invasive, and it is, but we also have to consider that, we're requesting $500,000 from an institution to buy a property, and they're going to want to know everything about you, right? So full disclosure is very important. I know we're talking about process, so just to kind of recap what Dean mentioned. So there's an application that's done online, 15-20 minutes, you're done. From there, there's documentation requested. We use a secure portal to keep everything safe. A lot of people will take 2-3 weeks to get their information in. Someone that's really motivated, might get it in 2 days, depending on what their access is to the paperwork. We always tell clients, like, the first 2 steps are kind of in your court. We're here to support. We're here to help you. Anything you need, we can work with your accountant to get documentation direct. But if there's a delay, it's primarily going to be on you as the buyer and getting us the information, right? If you take a month to get us the information, we will probably have your file reviewed within 2 business days. At that point, the process that our team runs is we book a planning call. And these can be call, Zoom, what have you. And we actually summarize all of your information in a nice clean email. We send it to you so that you can look at it and we can talk through it, and you can let us know, hey, you know what, my income seems wrong. I just got a raise last week. Hey, you know what, I'm noticing that my truck payment's not on my credit bureau. It's not showing up. You know what, my assets are a little bit different. I forgot to add in this property that has no mortgage in the US, right? There's all these little things. So we want to put that in front of you, talk through it, make sure that there's no errors. And this is us just it's probably a little bit overkill, but this allows us to build great relationships with our clients, avoid issues in the latter half of the process, which is the exciting time for you, which is buying a home. And at the same time, it allows us to build really strong relationships with real estate agents because they trust our pre-approvals. So flipping this back to the referral partner, in our industry, a lot of realtors send business to brokers. So we have to appreciate that. And if you're doing incomplete pre-approvals and they're spending their time and their weekends looking for homes only to find out that it doesn't work because you as the broker made a mistake, not good for that whole situation, but especially, also that referral partnership is probably going to die right there and then. So process-wise, application, documents, review, and planning call. And from there, if everything looks good and the buyer's happy, we're issuing a pre-approval same day or next day. A lot of times we're taking that scenario back and we're saying, hey, you know what if we had a parent? What if we get a bit of a gift? What if we pay off this debt? And we'll do a re-review, sometimes 15 times if needed, until we get it to a point where everyone's comfortable, happy, and we're ready to issue a pre-approval.
Yeah, absolutely. I mean, a couple things you can keep in mind is just, it might be the cart before the horse. Is just try and stay organized, right? It can be, depending on your scenario, like a pretty onerous process in terms of gathering all the supporting documents. You will need to bug your employer if you're employed. If you're self-employed, you will likely need to bug your accountant as well. In any way, if there's any way we can help you be efficient with that, I mean, that's certainly what we're here to do. The biggest thing I would say too is so many items now are digital. Like if you are thinking about buying a home or refinancing a home and you haven't set up your online My CRA access yet, do that, and do that soon, because it's such a great tool to be able to pull tax documents that we can use just to make the process really smooth. And yeah, just keep us informed the whole way through. And if you're having a hard time with gathering documentation, trust me, we've pretty much seen every single type of pay stub out there in the marketplace. We've seen every single type of bank statement out in the marketplace. There's different access points for each one of these items that we can certainly help you with. And that for sure is always going to be the lag time. It's just the documentation piece. And don't leave anything out. And certainly don't try and hide or not tell us information. I mean, Derek mentioned earlier, we're here to help you get approved. We're not the bank, right? So you don't necessarily need to worry about disclosing something to us that we're going to somehow, decline you right there on the spot. We'll try and work with you to mitigate any issues that we have versus, something popping up last minute that just causes everyone's hair to catch fire.
Great stuff. I mean, well said. I mean, I'll just quickly address some common questions and concerns that have come up. I'd say the number one question we probably all receive is just mainly around credit checks and how it impacts your credit score and the necessity of having to do that. Our number one response to that is it is such an important piece of the file, and if there isn't a credit check done, there could be something we're missing. There could be something that we may have more than enough time to mitigate if we don't know about it. So it is a very important piece of the puzzle, and the actual impact on your credit score is next to nothing. In reality, you can pull your credit score as many as 7 times in one calendar year with really little to no impact on your credit score. It's more so around the story of a credit pull. I'd say, probably the number one mistake, and maybe why this is such a common myth in the industry, is that people may go car shopping. We've seen this actually before from time to time, as people go car shopping and they look at, let's say 5 car dealerships in one day, and every single one of those car dealerships pulls their credit. Well, this is a good example of a credit score being more of a story or more of a bill repayment resume to a lender that's making a decision to lend you the funds. And in that case, they would look at it as, hey, you pulled your credit scores 5 times in one day and didn't buy a car. What was the problem? What are we missing that they maybe saw? And again, it's just because of the story of the drawn out process of pulling your credit, and maybe so many times in one day. So the impact on credit score is really not something to be concerned of whatsoever, and more reason why to just work with a mortgage broker, pulls your score once, utilizes that credit report for all lenders that we work with. The other thing that comes up is just the necessity of submitting all documentation. It is very important that, again, we've talked about this throughout the episode, of the importance of a true pre-approval. So I won't hit that one home too much. maybe again, like not to go too much around banks and lenders versus mortgage brokers, but again, investing that time is really what is going to make sure you have the right information and the right solution for you going forward. With that, to wrap up, any tips for potential buyers on how to stay organized or ultimately prepare for the pre-approval process? We'll wrap up there. If anyone has any questions or anyone looking for some personal advice or support, please don't hesitate to reach out. This is why we're here. If you have any feedback or any suggestions for future episodes, please always let us know. We're all ears. And if you think we earned a 5-star review, please give us one. It means the world to us. And we hope you enjoyed this one, and on to the next one.